Hello, and welcome to Donut Investment. This analysis is for Gilead Sciences on Nasdaq as of 20th of July, 2026, with a share price of $133. The full report is on donutchin.ca. Gilead is a cash-rich antiviral leader with no major patent cliff until 2036, trading in the attractive band, and the medium and long calls are both strong buy. Short-term, it is a hold. The tape pulled back with no volume-backed reclaim, so there is no confirmed entry yet. Accumulate on weakness, buy on confirmation. The quality here is real and unusually durable. Gilead earns net margins around 31% and gross margins near 80%, and it converts more than all of its earnings into free cash. What sets it apart from most large pharma is the patent runway. The flagship HIV franchise, Biktarvy, is protected to 2036, so there is no meaningful near-term patent cliff to fall off. That funds a fast diversifying pipeline and 11 straight years of dividend increases. Modest top-line growth, around 4%, is the only real soft spot. On valuation, it screens cheap for the quality. The shares trade at about 13.7 times forward adjusted earnings against a warranted multiple of roughly 20 times, a ratio of 0.68, squarely in the attractive band. The free cash flow yield is near 6%, which funds a growing dividend with room to keep raising. At today's price, the market is pricing in only 2 to 3% long-run earnings growth, less than the pipeline can plausibly deliver. One honest caveat: recent month analyst targets have drifted down toward 142 as the stock recovered, softer than the full-year consensus. So why not buy today? The three timeframes that matter for a position, monthly, weekly, and daily, are all in uptrends, with the price above its 50 and 200-day averages. But it just pulled back from a 140 test in mid-July. Volume is running soft at 0.8 of average, and it sits mid-range rather than at support. There is no volume-backed reclaim and no discounted entry, so the technical path is unmet and the short signal is capped to buy on confirmation. Behind that, the pipeline driver scores a tailwind, and the latest macro report now names Gilead the cleanest winner of the defensive rotation, which is exactly why the medium and long calls upgrade to strong buy. The risks are real, and they are why the bear case exists. That bear sees the shares fall to about $112, roughly 16% below today, on a mix of further oncology setbacks, an adverse drug pricing ruling, or a risk-on reversal that unwinds the defensive bid. The oncology worry is not hypothetical. The Trodelvy lung cancer trial was discontinued in June, a reminder that the cancer bet is unproven. The deeper thesis risk is the HIV core itself, a superior long-acting rival from VV taking share, or a price cut on Biktarvy or lenacapavir under the drug pricing rules. One reassurance: with a beta of 0.34 and no AI exposure, Gilead does not carry the market's concentration unwind tail. Its bear is its own, not the index's. Now weigh the risk against the reward. The bull case is roughly 39% above today, the base case, the most likely, about 19%, and the bear case a fall of about 16%. So you are risking about 16 to make 39. So, our call on Gilead Sciences on Nasdaq, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donut Investment at donutcin.ca. The link to the full report is in the notes below. Have a great day.